All right. So we've kind of rolled out a stat that we got that for every week of the government shutdown, it negatively impacts quarterly GDP by 0.1%. But as this continues to go on, potentially to a new record, are we seeing bigger impacts than that stat really shows?
Yeah, I think the more concerning thing would be if the shutdown drags on and spirals into something that would have more prolonged impacts. If government contractors and vendors have not been paid, we'll think about cutting staff. Businesses that can't get licenses or permits will think about downsizing or pausing investment. These are the kind of things that will help cause more long-lasting damage to the economy and drag into 2026 as well.
All right. It looks like we're going to get a resolution to the SNAP benefits that impact just about 12% of all Americans. It's a lot of people. Also, those SNAP benefits, for every dollar spent, there's about $1.50 of economic impact. So without those going out or until those going out, there is some economic impact there. But I think the Affordable Care Act marketplace premiums, that could be a real issue. I mean, increasing by 114%, that would certainly take away a lot of discretionary income. How do you see that impacting not only the economy, but the markets?
Yeah, I think this is exactly the kind of dynamic that contributes to this two-speed economy that we've been seeing, with folks at the bottom end of the income bracket struggling with higher default rates on credit card loans, auto loans, et cetera, et cetera. On the other end of the spectrum, you have high earners, and especially those that have accumulated assets, still spending at a pretty good clip. And I expect this dynamic to continue. I think the Fed's going to continue to cut, and the combination of lower rates and higher inflation should help to ease financial conditions even further, adding even more fuel to a market that's already running pretty hot in my view. And I think this risks stoking inflation even further. And inflation is a stealth tax that disproportionately harms lower incomes individuals. And I'm fearful that we're going to see a reacceleration of inflation into 2026.
All right. You know, a number of people are actually concerned about it. TD Cowen out with a note saying that the ability of a lot of retailers to absorb the tariffs is starting to diminish, and also they need to restock, so we could see those higher prices. So inflation on the minds of a lot of people. I want to talk about something else, wealth effect. We often talk about this bifurcated economy and bifurcated spending. The wealth effect for a lot of people who own stocks and homes, they're seeing things appreciate. At what point does this impact on middle and income consumers start to hit the market and impact the wealth effect they're feeling and maybe even hit their spending?
Yeah, I think, this is best evidenced by the boom that we're seeing in AI in particular. Big tech companies are spending upwards of 6% of their operating cash flow on capex, and AI may drive productivity in the longer run and long-term capacity. But if that consumer base is weak and the demand side continues to falter, that disconnect can only proceed for so long before coming back to earth.
All right. Chris, like a lot of other economists, you put out estimates for quarterly GDP and things like this. As we see the shutdown continue, as we see the potential for these premiums to increase, are you rethinking your outlook for this quarter, for the next quarter, for next year?
Yeah, certainly. We've certainly downgraded growth that we see in Q4. But the thing with shutdowns is, given they're usually fairly short in duration, a lot of the pullback in spending that we see from the pent-up demand for this quarter will be given back for the next. And, in aggregate, consumer balance sheets and corporate balance sheets are still pretty strong. So unless this shutdown continues to drag on and has more lasting impacts, we do think that the growth blip that we're going to see in Q4 is just that. It's only going to be a blip.
Chris, one last question for you. We're talking about your estimates. I want to talk about ratings agencies. We haven't really brought this up since this government shutdown started, but what happens if the U.S. credit rating gets a downgrade? What impact does that have on the market, also foreign confidence in our treasuries, everything else? Is that something we need to start thinking about?
Yeah, I don't think the ratings agencies specifically would be a catalyst for anything really terrible. We've seen a downgrade for the U.S. economy before. This is obviously more about a willingness to spend than a capacity to spend. But yeah, I would see that just being a blip as well. The broader story about distrust in the U.S., that was certainly prevalent in the first half of the year, but we really haven't seen that borne out in any of the data. There does still seem to be ample demand for U.S. debt.